Most traders see a nice candle pattern and hit buy or sell without asking, does this setup even deserve my money? Today, I'm going to show you my 3-step validation process that stops you from jumping into garbage trades and keeps you aligned with high probability setups. Hi, if you're new to this channel, I'm Coach Pro and I've been a trader for over 3.5 years. Today, I'll be showing you the 3-step process I use to enter into highly profitable trades. No hesitation, no fluff, highly probabilistic trade setups. So, if you want to elevate your forex game and pull the trigger when the market is ripe, stick around to the end of this video so you don't miss out on the most important things that will change your forex game for real. Subscribe to the channel if you have not already done so, and without wasting so much time, let's get into the video. Here's the reality. Your edge doesn't come from spotting a trade. It comes from filtering out the ones that look good but aren't. If you've ever said, it looked perfect but it failed, it's because you skipped this process. Step 1. Trend context. Before you even think about entries, you need context. What's the higher time frame trend doing? Are we in a clean bullish or bearish environment, or we're just moving sideways? If your setup goes against the higher time frame without a strong reason, it's not a setup, it's a gamble. And in trading, you don't want to be gambling. Think of it like swimming. You either swim with the current or you get exhausted fighting it. Step 2. Key levels and structure. Your setup has to be positioned at a level where price has a reason for it to react. That could be a supply or demand zone, previous high or low, or a liquidity pool. Here is the filter. Is price breaking into a zone with conviction? Is it rejecting from a level after a break of structure or a change of character? If you can't point to a structural reason why this exact price area matters, the setup's foundation is weak. Step 3. Confirmation. This is where most traders either get paid or get played. Your confirmation could be a lower time frame break of structure in your trade's direction, a clear rejection wick, plus strong opposite candle close, volume or volatility aligning with your bias. The golden rule: confirmation is not I feel good about this trade. It's the chart objectively saying we are moving now. Now, let's go to a real chart and show you how I apply all of this. USD CHF earlier on this year was bearish. It's still bearish now, but how did we get into this trade? So, the first thing I'll do is to identify the trend. As I've said, the trend is bearish. The next thing is to have your key levels plotted, your support levels, your resistance levels, and all that. So you can see that on this chart now that our support and resistance levels have been plotted. All these beige colored areas nicely plotted. So these are the monthly levels all the way down, and this is a daily level as well. Now, the next thing you need to do is, you've known the direction of the market, which is the trend. You've had your support and resistance level plotted. How do you enter into trades? Simple. You scale down to a lower time frame to take your trades. And if you know me already, and if you've been following most of my videos, the most favorite setup I usually use to get into trades is the counter trend line break. Now, earlier on this year in USD CHF, we had this right about here. So this is where the market was at the time. The market got to this level right about here and rejected. So there was a strong daily candle close above the zone, and a daily bearish candle rejection started to occur. All I did was to scale to the lower time frame to ensure that I take a trade in the direction of the overall trend. So the overall trend says it's bearish. I'm only wanting to take bearish trades. So I just come over to the 4-hour time frame like you see me now and draw my counter trend line. And as I've drawn this counter trend line, all I do is to wait for the market to come back and break this counter trend line, and I get into a trade. So in this case, I'm having a rejection at the monthly zone or the key level, and also a break of the counter trend line. Now, when that happened right about here, I got into this trade and we were able to bank a good amount of profit, like so. So my stop loss came above there, and my take profits to the next support area right about there. And we rode this trade all the way down. So we rode this trade all the way down like so. That's how you enter into trade. Now, let's use this 3-step trade method to validate the next trade I'll be taking. Let's look at GBP/USD. Now, GBP/USD, for the trend context, GBP/USD is bullish. You can see right about here that the market is bullish. For the key level context as well, you can see that the key levels have been plotted right about here. We've got our beige color zones above and below, then we've got our daily zones too. Then we've got this small black line here, which I did make mention of in my last video. So if you've not watched this already and what this black line signifies, go back to this previous video right here. Now, this black line represents the neckline of a previous head and shoulder that saw GBP USD to the downside. Now, this black line too is an important key level that we should be watching out closely for. Now we have our trend context, which is bullish, and the key levels all marked out there, like you can see. All I'll need to wait for is a confirmation, setup for me to get into this trade. Now, I've drawn this right about here. Price actually broke this level, so there was a change of character right about here. After price broke below this yellow rectangular zone, which is the daily zone, there was a change of character, but I was still optimistic of a possible upside move of GBP USD, and I did mention that in my previous video, and I said that anyone trying to take GBP USD, a trade now on GBP USD, should be cautious because we are kind of 50-50 on GBP USD. The only way I want to take a trade to the upside on GBP USD is if we come back above this yellow line and trade. Now, since when I made that video to now, GBP USD has been stalling right about this area. So you can see what GBP USD is doing right about here. There's basically no action happening around here. It's not broken above it. It's not even convincingly broken above this counter trend line. And it's not even breaking yet above or below this yellow zone. It's just hogging the zone. So there are no trades for now on GBP USD. But in line with my trade point trade setup or entry criteria, I'll need to wait for GBP USD to actually break above this counter trend line and break above this yellow zone. And in that case, it will give me more confidence to enter into an up trade for GBP USD. If you just follow this step process, trend context, key level, confirmation, you will stop taking random trades and start stacking high quality ones. If you found value from this, give this video a like and subscribe to the channel, and I'll keep you guys updated for what I'm looking out for this week on my trades. See you in my next video.